In this video, we are going to solve a problem on capital gain tax where we have considered the cost of improvement and the cost of brokerage as well. Now, if you look at the sum, we will first pick up the information that will be required to solve the problem. So first, let us read the question itself. So first information we get here regarding the purchase of a house. So what kind of property is it is? It is a housing property. Now what is the purchased price? Purchase price is 45 lakh. And when it has been purchased? It has been purchased in January 2011. Now after purchasing that house, the person has also done a renovation. So renovation, information on renovation is also there. And when the renovation has been made, the renovation has been made in the year 2011 and the month is May. So the May 2011 is the time when the person has spent on the renovation of the house. And how much he has incurred? The cost that he has incurred is rupees 5 lakh. Now, at the time of purchase of the house, he also has paid to the broker. The broker's amount means it is the brokerage. And how much is the amount? The amount cost rupees 1 lakh. So, the entire cost of the purchase, the purchase of acquisition is the purchase price, which is 45 lakh, and then the expenditure for the acquisition, that is the house brokerage, and the improvement cost, which will be coming as the 5 lakh, which is the cost of renovation. Now, a part of the values, we also do have the information on the cost of inflation index, or the CII. CII for the financial year 2010-11, financial year 2011-12, and financial year 2019-20. Now look at the year of purchase. The year of purchase is 2011 and the month is January. So it will fall under the financial year 2010-11. And if you look at the time period for the renovation, it is May 2011. So after the 31st March of 2011, which means this period will be coming under the consideration for the financial year 2011-12. And now we will look at the further information. What is written regarding the income of the purchaser or income of the person who is involved in the capital asset gain. So in this case, it is 30%. 30% he belongs to the highest income tax slab. So the rate at which he has paid the tax is 30%. Now we will look at the questions. The first question is saying that calculate the capital gain tax if he sells the house in January 2012. January 2012 means he is selling the house almost after 1 year. And what is the cost? The cost is 60 lakh. So the selling price is 60 lakh if he sells the house at 2012 itself. And also consider the brokerage cost of 1 lakh rupee that will be incurred during the selling time. So at these cost will be deducted from the sold amount or the selling price. From the selling price itself, we have need to deduct it. And let us see the next question. In the next question, it is said calculate the capital gain tax if he sells the house in September 2019. Now September 2019 means he has purchased in 2011 and sold in 2019. So longer period of holding is involved when we are considering the question B, and shorter period is is involved when we are considering question A. And the cost of selling, if he sells the house in September 2019, the cost of selling is 90 lakh rupees. Now we have grabbed all the information and we will proceed further to solve this problem. Now, as we know, we need to first identify the type of the capital asset. We know that there are two types of capital asset. One is short-term capital asset and the other one is long-term capital asset. And what will be the time period or how we can identify the time as a short-term or the long-term? It depends on the type of the asset. So in this case, for our example, we are dealing with an immovable property, that is the housing property. So in this case, the short term will be considered for less than 2 years and the long term will be considered for more than 2 years. And accordingly, the tax rate will be applied. For short term, the tax rate will be the income tax slab as per the tax rate of the income tax slab of the individual, and for the long term capital asset, only 20.8% will be levied. So let us now find out that what are the capital assets we do have in both the questions. Now the treatment of the capital asset differs based on the short-term or long-term category. For short-term capital gain, what will be the calculation formula? Here, the sale of consideration, that is nothing but the value of the sale. So, or the selling price. And from the selling price, we deduct the cost of acquisition, which is nothing but the purchase price, the cost of improvement that we can consider as the renovation, as the cost of improvement, and the expenses incurred exclusively for the sale of the asset that we consider as the brokerage. Now for the long-term capital gain from the sale consideration, which is nothing but the value at which the individual sells the property, we deduct this value, we deduct from this value the value of cost of acquisition. But remember here we consider the indexed cost of acquisition, and also we consider the indexed cost of improvement that is unlikely to the case when we have considered the short-term capital gain. In the short-term capital gain, we have directly considered the cost of acquisition. But in the long-term capital gain, we find the indexed cost of acquisition. Why? This is because for long-term, we can see that the value of the money deteriorates over time. Now for the indexation factor, we need to calculate the indexation factor to find out the indexed cost of acquisition and the indexed cost of improvement. Now, indexation factor, we have already studied it. The indexation factor, the formula is that in the numerator, we consider the CII of the transfer year. Transfer year means the year when the sale is conducted. And in the denominator, we consider the CII of acquisition or the improvement year. So in this case, if we are considering the index cost of acquisition, then the cost of acquisition will be multiplied by the indexation factor where we consider the acquisition, CII of the acquisition year. And if we are calculating the index cost of improvement, then cost of improvement will be multiplied by the IF, where in the denominator we will use the improvement year. Now let us see that with the values that how we can calculate it. First we will consider the activities to identify whether the capital asset is short-term capital or long-term capital. In the first question, as the information we have grabbed, the purchase year is January 2011 and The renovation year or the year of renovation is May, that is the same year 2011. Now, for the first question, the selling year is nothing but January 2012. Now, if you look at the time period of selling, look at the time gap between the selling and the purchasing time, it is less than 2 years. Less than 2 years means it is short-term capital, short-term capital gain. So the capital gain, if the individual earns any gain from the selling of this capital, it will be coming under the bracket of short-term capital gain. Now we will look at the values to calculate the capital gain. Now we have grabbed all the information here and the purchased time period, the time period for the renovation, and also the time for the selling. Now in this case, if you look at the renovation has been made before the selling. So we will consider the renovation cost when we are considering the capital gain even in the short run. So the value of consideration received, it is nothing but the sale. What is the value of consideration received for the first case? For the first question, it is 60 lakh rupees. So we will write 60 lakh. Now in this case, the cost of acquisition or the cost of acquisition of capital asset, the cost, it is nothing but the purchase price, the price of the house at which the person has purchased it. Now cost of improvement, it is nothing but the cost of renovation. So how much he has incurred to renovate the house? It is 5 lakh rupees. Now expenditure incurred, whether he has incurred any expenditure for this? Yes, he has incurred an expenditure and the expenditure is equal to 1 lakh rupees because he has paid to the broker during the purchase. So what will be the total cost of acquisition then? Total cost of acquisition will be coming as 45 lakh plus 5 lakh plus 1 lakh, which is together consist of 51 lakh rupees. Now what will be the short-term capital gain? We will deduct the total cost from the total value of consideration that has been received. So in this case, the short-term capital gain will be nothing but it is 9 lakh rupees. So exemption, if any, no, we don't have any information, sure, so we will keep it blank. What is the tax that has been implied? The tax rate, he will be paying as per the income tax rate. So 30% will be paid by him. And if we now consider or calculate the capital gain tax, then it will be nothing but the capital gain, that is 9 lakh, and it will be multiplied by the capital gain tax rate, which is 30%. So, and the value will be how much? The value will be 2,70,000 rupees. So this is the value, or if I just delete the formula. So this is the value of the capital gain tax in the short run. But remember here, he has also paid the brokerage at the time of selling. So the value of consideration that has been received is not 60 lakh. We need to deduct 1 lakh rupee also as the brokerage paid by the individual. So it will be 59 lakh rupees, the value for consideration received. Now in this case, so the short-term capital gain then will not be 15 or 9 lakh, it will be 8 lakh. So when we are considering the brokerage from both the sides, the brokerage is considered from at the side of selling as well as at the side of purchasing the asset. So it will be 8 lakh rupees. And if we consider the 8 lakh as the short-term capital, then applying the 30% tax rate, the value of short-term capital gain tax will be 2,40,000 rupees. So when we are considering the brokerage on the selling side, we can see that the capital gain as well as the capital gain tax rate declines. So now we will consider the activities. Now purchase. When the purchase has happened, it remains unchanged. That is, the purchase has happened in January 2011. It is same as the previous part of the sum. Renovation ranged, and it has happened in the same year, that is May 2011. And when the person has sold, in the case of second part of the problem, the person has sold the property in the year 2019. So month is September and the year is 2019. Now if you look at the gap between the sale and the purchase, the gap is more than 2 years. So it belongs to the long run capital gain. And what kind of tax will be applied? That will be long run capital gain tax. And the rate of tax, what will be the rate of tax? The rate of tax will be here 20.8% that we have already studied. Now CII, the cost of inflation index will be important because we need to identify the indexation factor from the long-term capital gain. Now for CII, for the long-term capital asset, we will consider the CII. The CII given for the year now 2010-2011, the CII is 167. For the renovation year, the CII is given as 184. For the selling year, the CII is given as 289. Now in this case, therefore, we will calculate the indexation factor. The indexation factor for purchase means what will be the value of, we need to calculate what will be the value of the purchase for the selling year with the help of the indexation factor. And how we can calculate it? We just put the CII of the selling year, that is 289, divided by the CII of the purchase year, which is 167, and the value will be coming as 1.73. What will be the indexation factor for the renovation year? The selling year's CII is 289 divided by the renovation year's CII, which is 184. So the indexation factor will be coming as 1.57. Now we will be moving to the values to calculate the capital gain. We have grabbed the information, and the purchase, for the purchase, the indexation factor is 1.73, and for the renovation, the indexation factor is 1.57. So value of consideration, remember in the second part we don't have any brokerage on the selling side. So value of consideration received will be the inter value of selling, and the value of selling is 90 lakh rupees. Now instead of taking the cost of purchase, here we will consider the indexed cost of acquisition or the indexed cost of purchase. What is the actual purchase value? The actual purchase value is 450000 or 45 lakh, and these value will be multiplied by the purchased year indexation factor, that we have calculated. So for 1.73, and the index value of purchase is coming as 77 lakh rupees, 85,000 rupees. Now we will calculate the indexed cost of improvement with the help of the indexation factor that we have calculated for the renovation year. So here what is the cost of renovation? The cost of renovation incurred is 5 lakh rupees. So 5 lakh multiplied by the indexation factor, which we have already calculated, 1.57. So the indexed value of the improvement is nothing but 7,85,326 or 7,85,326 rupees. Now expenditure incurred for brokerage. See, here all these items are the total, are the figures that will help us to calculate the total cost of acquisition. So is there any expenditure, is there any brokerage that has been incurred at the time of getting the capital? Yes, 1 lakh rupee has been paid as the brokerage at the time of purchase. So 1 lakh rupee we will take. But remember, here the expenditure incurred to get the property or the brokerage will not be the value that we will be multiplied with the indexation factor. So it will be kept as it is. So what will be the total cost of acquisition? We will start 86 lakh rupee, 70,326. Now, once we get the total cost of acquisition, we will try to calculate if there is any exemption. No, we don't have any information regarding the exemption. So, we will keep it as blank. So, what will be the capital gain? The capital gain will be the value of consideration minus the total cost of acquisition, and the amount will be as 3,29,674. And what tax rate will be applied here? The tax rate that will be applied is 20.8%, because it is the long-term capital gain. So 20.8% will be applied. And what will be the value of capital gain tax then? The value of capital gain tax will be levied, that is the tax rate levied on the long-term capital gain, and if we calculate it, the value will be coming as 68,572 rupees. Now, if you look at the values, you can see that when in the long run the property has been sold almost the cost, almost the value that is double. So 45, at the cost of 45 lakh, the person has acquired the property, acquired the capital, and he sold at the double price, that is 90 lakh rupee. But when we consider the indexed value, then we can find that the value of money has deteriorated. That's why the 45 lakh rupee in 2011 became the 77 lakh rupee, 85,000 in the year 2019. So here it will be 2019, because in the second problem the year that has been given is 2019 for the selling. So we can see that how the capital, it gets inflated due to the time. So here we have solved the problem. In the next video we will be uploading about the problem which will be further more complicated.